Thank you very much for coming. My name is Darren Joseph, HEJ.tax. Our team is really about tax. We work with private clients and we help them demystify the sometimes confusing world of international taxation. We're part of a wider practice here in Asia called Moore's Roland. I'm actually here for Weber Partners meeting. We have it twice a year, and this time it's Jakarta's turn to host us. So I thought while I'm in town, I will set up some time and meet some of you guys. So thanks for coming out. So the US and many European countries do have an inheritance slash estate tax. The way the US model works, it's based on where you're domiciled, which is different from tax residence. So there's tax residence and there's tax domicile. Typically, they're the same. For example, let's say France is going to be the same, but in the UK and in the US, it could be different. So someone can be living in Bali or living here in Jakarta with a US passport. Obviously, they're not physically resident in the US because they're living here, but they're still a US tax resident by virtue of having that passport. But if it is that their center of life has completely shifted away from the US, one can argue that they're not US domiciled. So therefore, when it comes to the estate tax upon their passing, only the US situs assets would be subject to that estate tax. Everything that they have in Jakarta and Bali, no, the IRS shouldn't be able to touch that. To sound crude, there's a death tax. So there's a tax that's payable on the estate of someone who passes. If it is that they live here in Indonesia and this is their center of life, they really have nothing back in the US and go back, they don't care. Then that death tax would apply to assets in the US only. The assets that they have here in Jakarta or wherever, Surabaya, everything will be free from any US taxation upon their passing. The UK has an inheritance tax. The US typically doesn't. Your family here and your grandparents here in Indonesia, which happens, can give you $100 million. It will be reportable to the US, but it will not be taxable. No tax. Because the tax is levied on the person that's giving it, not the person that's receiving it. And if they're not a US person, then the US has nothing to do with them. Anymore. So if it is your US taxpayer and your Indonesian relatives want to give you $1 billion, it will not be taxed by the US. So when it comes to international tax, it seems counterintuitive, right? But the US, and to be fair, most developed jurisdictions, they're more concerned with information. So they want to know what you're doing rather than, it's not about revenue collection, because one can argue that the cost of administering the collection of taxes from these Americans all over the world, the cost of that administration is higher than the money that they collect. So it's not about that. It's about the information. And we know that to be the case. So if you don't pay taxes, yeah, you're going to pay back taxes, interest. And we're in a low interest rate environment anyway, so it may be negligible. But if you don't report the fact that you have shares in a PTPMA, or you have a unit trust in Singapore, you have some ETFs in the exchange here in Indonesia, it could be jail time. So the reason is that they value information more than tax collection. And that came after 9/11 with the Patriot Act. There's this almost implicit assumption that if you're not reporting international transactions, you're up to something. And so the penalties reflect that.